Good day, friend. Gordo here. In this presentation, we're going to do a bit of due diligence on Choice Properties Real Estate Investment Trust. And just before we get underway, here comes the safe harbor. This presentation is produced and published on and around April 25th, 2023. It includes timely information that can be quickly rendered obsolete, and it is meant for education and information purposes only. The source of the information used in this presentation is largely Choice Properties. This is not an offer to purchase securities. Items presented here may not be suitable for everyone. Rates change, values fluctuate. Please consult an experienced qualified licensed professional prior to investing to ensure that your investments are part of a comprehensive plan designed to help you and your family meet your long-term financial goals and objectives. Also, when recommending products and planning strategies, broad tax and legal issues may be discussed. Nothing should be construed as tax or legal advice. There, now that we've floated that boat, let's move forward. Here's our agenda. First, we'll do a deep dive into the history of Choice Properties and its evolution as a business. Second, we'll look at some of the people involved in management. Third, we'll explore their operating performance. And finally, we'll review and see if we can determine whether Choice Properties represents an opportunity for us right now. As landlord to numerous Loblaws grocery outlets, Choice Properties is among the most preeminent real estate investment trusts in all of Canada. They own and operate more than 700 properties, more than any other publicly traded Canadian REIT. But they've only been around for 10 years. How does a real estate investment partnership amass so many coveted properties in only the span of a decade? It actually starts in 1882. A young George Weston, a 12-year-old baker's apprentice, starts selling bread around his Toronto neighborhood. He meets with success and soon buys out the baker. In fact, over 40 years, he builds the largest bread baking business in the country. Canadian consumers can still purchase a loaf of Weston bread at their local grocery stores. In 1924, his son Garfield takes over the reins of George Weston Limited. Through the first part of the 20th century, he expands into commercial foods, buying up red and white Confederate grocers across the Canadian prairies. And he eventually buys out the Loblaws grocery chain, which had merged with Dominion Grocers. He even bought the Nielsen Dairy Company. Nielsen's still known for their chocolate bars and ice cream. In the 1970s, his son Galen Weston Sr. takes the helm and consolidates the organization. Under his leadership, a strong executive team headed by Dick Curry, Richard Lederer, and Don Reed create the strongest grocery franchise in the country, outpacing Safeway and outpacing Sobeys. In 2006, Galen Weston Jr. succeeds his father in running the family business. The first years aren't without their challenges. He faces tough competition from American retailers Costco, Target, and Walmart, who introduced groceries as part of their retail offering. Not surprisingly, the share price stagnates and flounders for a bit. From 2005 until 2013, the share price decreases at an annual rate of minus 10%. But then, in 2013, Galen Weston pulls a couple of rabbits out of his hat. He buys the Shoppers Drug Mart chain for $12.4 billion. Loblaws is now also the largest pharmacy in all of Canada. Then he takes all of the properties that Loblaws has amassed over a century and he spins them off into a real estate investment trust. This frees up the balance sheet and it allows Loblaws to focus on retail and the REIT's leadership to focus on property management. And if that weren't enough, in 2018, Choice acquires CREIT, one of the oldest real estate investment trusts in all of Canada. Now the share price has some legs. Over the last 10 years, Loblaws' share price has grown at roughly 12.5% per year. And Choice Properties has performed well also. Since its IPO, the REIT's unit price has appreciated at about 4% per year, while throwing off about 75 cents per unit per year. The properties are now managed by a team focused on property development, management, and operating performance. These days, Choice Properties REIT has a portfolio that includes over 700 retail, industrial, and mixed residential properties located in every province across Canada. Most of it is currently in retail, but their holding includes large blocks of industrial space and a number of completed mixed-use residential complexes with a residential pipeline that will keep planners busy for years. Their retail portfolio includes some 576 properties worth $10.9 billion. In a recent report to unitholders, President and CEO Rael Diamond expressed the reasons for the strength of the retail properties. With their retail space, Choice Property enjoys a strategic partnership with Loblaws grocery stores, but they're also able to realize further value by creating space for other retailers like Dollarama, liquor stores, and the Canadian banks. They also hold an impressive portfolio of 116 coveted industrial properties worth $3.5 billion. Properties are located in key Canadian urban hubs, many serving as distribution centers for their retail stores. Like this complex located in Surrey, BC. And with surging demand and a nationwide lack of industrial space, there is plenty of room to increase rents as leases come up for renewal in the next few years. Now let's review their mixed residential portfolio. Choice Properties has 11 mixed properties currently valued at about $900 million. However, they have big plans. For years, a number of their properties have housed grocery stores in prime locations like this 19-acre site on Eglinton Avenue in Toronto. Given the demand for housing and a long-term trend towards urban intensification, they're able to complete mixed residential development on these properties without the need to acquire further real estate. It makes for a competitive advantage at a time when the cost of development is prohibitive. Over the next few years, Choice Properties has a development pipeline that will see them increase their industrial space by 7.2 million square feet and their residential holdings by 10.6 million square feet. Now let's crunch some numbers. Over the past 5 quarters, quarterly revenue averages about $318 million every 90 days. Funds from operations around $175 million, or about 55% of revenue. Now, net asset value isn't reported by the REIT, but at the end of the quarter, analysts have estimated that the NAV was about $16.90 per unit. Since 2018, revenue has grown about 2.44% per annum, funds from operations at about 3.66% per annum, and unit holder equity has grown at roughly 5.5%. So let's look at this from a business perspective. A person investing $100,000 of their capital into Choice Properties REIT would have obtained roughly 6,800 units based on the closing price on April 28, 2023. If the values from the company are used, an investor would have received roughly $1.15 of equity for every dollar invested. Based on recent operating results, that $100,000 of capital would generate about $12,000 of revenue, or about $6,600 of funds from operations. Current distributions to unit holders are about $421 per month, yielding about 5% annually. Choice Properties is one of the largest landowners in all of Canada. Their property portfolio includes retail, industrial, and mixed residential space, and they have lots of room to grow and develop those properties. It's why they're likely to create value over the next few years for long-term unit holders, and it's why they're a top 10 holding in our insured real estate equity portfolio. Perhaps you should give it some consideration. More information on Choice Properties is available on my website at www.think-income.com. where you'll also find more information in the notes below. And if you found this presentation useful, please give it a thumbs up or subscribe to my channel to get notifications about more presentations like this one. Thanks for watching, and please remember, stay safe, stay sage, and stay well.